I think high growth may be due for a huge bounce. Okay, so it all stems around the fact that the levels that we were at for high growth, and before we start, let me actually define the terms of high growth. Okay, basically, I mean, this is not all of the high growth stocks, just I'm talking about low cap, mostly tech, mostly innovative, disruptive stocks. You know, not necessarily Cathie Wood type stocks, but a lot of Cathie Wood stocks fall into this category, right? Just take a look at this watch list, pause right now. Those are most of the ones that I'm talking about, and plenty others as well. But basically, February 16th, right? And if I'm right about this, yes, not February, okay. Well, February 16th levels could come back in, but, you know, much upside is on the table for high growth. Maybe, if I'm right about this, okay? So February 16th, right? This day right here. February 16th is where the NASDAQ first peaked. And you may wonder, if you look at most of these other high growth stocks, right? If you just look at Bionano, Microvision, February 16th right there. That's its peak. Now, this was because of Wall Street bets, okay? That is the peak of many of these stocks. February 16th, SOS, okay, there you go. There's another great example. STEM, okay, exact same thing. Nano Dimension, it's literally the exact same for Nano Dimension. SPCE, exact same. I think you get the point, right? So a lot of stocks, a lot of high growth stocks were at their peak when the NASDAQ was at this level on February 16th. Almost all of those stocks that we just mentioned there, and you can look at the chart, rewind if you want proof, or just look at them, right? They're trading at like a 25% discount from all-time highs or February 16th levels. You may be wondering that, you know, the NASDAQ has already the NASDAQ's already hit these levels twice, and now we've broken below, or above, excuse me, we've broken above all-time highs, and we're chilling out right here. Why is high growth not doing so good? This is how you're starting to probably understand what I'm talking about here. The NASDAQ does have an effect on high growth, and the reason why is the rubber band effect, right? And if you have one stock, this is the ape language part, right? You can watch me, Kevin, for it if you want a more detailed explanation, okay? But basically, it's the idea that everything is correlated in the stock market, at least a small amount. And it's especially the idea that if you have something running up every day, or almost every day, running up a lot to all-time highs, like the broader markets, other stocks that are getting hammered every day or not doing so well while the NASDAQ's going up and it's just going sideways, going down, there's a rubber band between those that kind of, if the NASDAQ continues to go up, they kind of follow suit. They have to correct in the upwards direction. This is because the fundamental reason is because when you have a stock up here that's in the NASDAQ, right? Pick whatever stock that's doing better than it was February 16th, right? That is looking more overextended when you compare it to Bionano Genomics that's had fundamental, you know, exponential increases in fundamental value, yet still trading at more than 50% lower than all-time highs. And, you know, your recovery stock is not got that much better fundamentally since February 16th, and it's way higher than all-time highs. This is kind of what I'm talking about, okay? So it's a little bit peculiar to me to think why high growth has gotten killed so much, and why once we broke out of this, high growth has not even done anything. Okay, this week high growth has not done much. All right, this is watch list. Today the markets were on fire. Okay, the Russell is almost up 1.5%. The SPY and Dow are doing great. Nasdaq's doing great. Fear index is down almost 4%. VIX is down as well. Both the fear indexes are down. High growth's not doing well. And I want to make the point that this cannot happen forever. If the NASDAQ, even if the NASDAQ continues, even if the NASDAQ just holds above all-time highs and confirms this level right here as the new support, which it should, we should be seeing a correction in the upwards direction for high growth, I think. Now, you may make the argument that, oh, Brandon, February 16th, it was just hype. It was the dead inside days, man. Everyone was hyped up on high growth. That's all people wanted. Cathie Wood was the genius. I don't think you can justify even a 25% increase. I mean, we're talking about billions. We're talking about hundreds of billions of dollars in the stock market, helping being most of high growth, inflating, having them at way higher levels at February 16th than they are now. Okay, I don't think you can make the argument that just a little bit of hype or a lot of hype, even on Reddit and Cathie Wood investors and followers, they are responsible for all those hundreds of millions, billions, hundreds of billions, all that money that had to be in the stocks that were at higher levels on February 16th that are now today way lower, even with the NASDAQ going way higher and at all-time highs as of making this video. So ape language, right? If you didn't understand this, the NASDAQ is here, high growth is here. Okay, that's February 16th. Today, the NASDAQ is here, and high growth is here. Does that make sense to you? No, it probably doesn't. And this is kind of why I think high growth is due for a bounce. And I also think that a lot of these stocks like Microvision, Bionano, BNGO especially, this one the most probably because it's got hammered more than most of these other ones, at least in the last week or two. they're due for a correction, the upwards direction. That's what I think. I could be wrong. Do your own research. I also want to give you a couple more stats while you're here because we never do these. We're heading into July, which is a much better a month for the S&P 500 on average than the month we're in right now, June. But it's only it's the fifth worst month, so it's about middle of the pack as far as performance historically. So keep that in mind. Also, that U.S. economic calendar, right? You need to know the market headwinds, potential headwinds with interest rates, accommodative policy changes, and asset buybacks and repurchasing programs with the Fed spending hundreds of billions of dollars a month, and all the government spending. You need to know the potential, make your own opinions, but the potential market headwinds because of all these things. And the economic calendar is one way that you can go and kind of know about this stuff. Tomorrow we have the consumer spending. That might be something to look at. And obviously the Fed presidents, that's always something that can freak the market out. And with that being said, I'm going to show you the portfolio, and then we're going to get out of here. So there's the whole portfolio. That's the entire investing history with the Webull account. And with that being said, thank you so much for the non-financial advice. I will see you all in the next one.